Wow, what a week on Wall Street, right? It was pretty rough out there. And look, when things get this choppy, it is so easy to get caught up in all the noise. So in this explainer, we're going to cut right through that. We'll look at everything that happened, but from the perspective of a long-term investor, someone who's looking for real strategy, not just panic.
All right, so first up, let's just set the scene. It's really important to get a handle on the scale of what just went down, because this wasn't just some minor dip. Nope, the market was sending some very loud, very clear negative signals.
Okay, to put this whole thing in perspective, get this. It was the worst start to November for U.S. stocks since 2008. Yeah, 2008. Anytime you hear a comparison to 2008, your ears should perk up. That's a big deal, and it tells you investors were seriously on edge. It basically set the tone for a whole week of selling.
And that selling pressure, it was felt pretty much everywhere. I mean, no major index was safe. The Nasdaq, which is loaded with tech stocks, got hit the absolute hardest. That kind of tells you where a lot of the anxiety was. But even the Dow, with all its big, classic companies, couldn't dodge the bullet. This was a retreat across the board.
And if you want a perfect example of the pain in the tech world, just look at this. Nvidia? The absolute poster child for the whole AI boom. It dropped more than 10% in 1 week. When a giant, a market leader like that stumbles so hard, it sends these shockwaves of doubt through the entire market. It makes everyone start to second guess what they thought they knew.
So, the big question is, why? What on earth caused all this? Well, it wasn't just one thing. It was more like a perfect storm of worries all hitting at the exact same time. Let's break down the anatomy of this sell-off.
Okay, here are the top 5 things that drove this. First, you had that massive tech sell-off. People started worrying that maybe, just maybe, AI stock prices got a little ahead of themselves. At the same time, consumer confidence just fell off a cliff, which is always a bad sign for the economy. Then, you throw in the chaos from treasury yields bouncing all over the place, plus fears of a government shutdown. It's really a recipe for anxiety. And it all came to a head with this one big question. Are we in an AI bubble?
So, with all this chaos, what are you supposed to do? This is the million-dollar question, isn't it? The headlines are screaming, your portfolio is probably looking a little red, and you feel this pressure to do something, anything, right now. But hold on, because the smartest move might not be what you're thinking.
And this is where we get to the real heart of it. This is where we need to reframe the story. We're going to shift away from that short-term panic and look at this through the lens of a long-term investor.
Here is the most important thing to remember. For a smart, long-term investor, a week like this one isn't just a threat, it's an adjustment. And you know what adjustments create? They create opportunities. This is a time for strategy, not for fear. Okay, so what does being strategic actually look like? It's not about trying to guess what the market's going to do tomorrow, because honestly, nobody knows. It's about having a solid plan. So let's walk through what that action plan could be.
It really boils down to 3 core principles that work in any market. Number 1, analyze calmly. Step back, take a breath, and look at your portfolio. Does your original reason for buying still hold up? 2, manage your risk. Check your position sizes. And take a look at your stop-loss orders, the ones that sell automatically if a stock drops too far. Are they set up right for this kind of choppiness? And number 3, diversify. Seriously, this week was a huge reminder of what happens when you put all your eggs in one hot basket.
In that last point, diversification is so important. It's all about shifting your focus. So if you're way too heavy in those high-flying tech stocks, maybe this is the wake-up call to rebalance your portfolio into more defensive areas. Think healthcare, utilities, or even some of those classic value stocks.
So where might those opportunities be? Well, defensive sectors like healthcare and utilities tend to do better when everyone else is panicking. Parts of the financial sector, like insurance, can be pretty solid too. And here's a big one. Look for really great, high-quality companies that just got dragged down with everything else. And of course, there are always dividend stocks, which can give you some nice, steady income.
And just to make this a little more concrete, here are a couple of examples. Now look, there is no magic formula here. It all comes down to how much risk you're comfortable with. A more conservative investor might keep a good chunk in cash and bonds to soften the bumps. But a more aggressive investor, they might be mostly in stocks, but still keep some cash ready to jump on new opportunities. The main thing is to have a plan that you've actually thought about.
All right, let's wrap this up. Let's really boil this crazy week down to the most important lessons, the things you should actually remember long after the dust settles. Because honestly, every market cycle, whether it's good or bad, has something to teach us.
Here are 4 big ones. First, price matters. Valuation always matters. Even the greatest company on earth can be a bad investment if you pay too much for it. Second, diversification is your best friend. It's not just a buzzword, it's your main line of defense. Third, remember that sentiment can change in a flash. Market psychology is a powerful thing. And finally, don't ignore the big picture. Politics, the economy. That stuff really does move markets.
And that brings us to this classic piece of advice from Warren Buffett. A week like this one, it's a real test of your discipline as an investor. While everyone else was running for the exits, driven by fear, the long-term perspective says this might actually be a time for smart, calculated opportunities. So, the real question isn't what's the market going to do tomorrow? The real question is my strategy built to last for the long haul?